Another asset that we're keeping an eye on is Bitcoin. That was briefly falling below $100,000 for the first time since May. MacKenzie Sigalos is here. She's got more on the move. Hi, Mac.
Hey, Morgan. So that's right. Bitcoin was trading below that key $99,000 threshold today. Its lowest level in over a month after President Trump confirmed that U.S. bombers struck 3 of Iran's nuclear sites over the weekend. Now, those strikes sparked a wave of risk aversion across crypto. At its worst point today, Ether was down more than 10%, with Solana, XRP, and Dogecoin also sliding, dragging the entire market deep into the red. Digital assets are starting to come off those lows now, but the sell-off reflects part geopolitical shock and part inflation fear. If Iran moves to block the Strait of Hormuz, a critical oil route handling 20% of global supply, J.P. Morgan is warning that oil could spike to $130 a barrel. Now, one closely followed macro research firm says that kind of shock could drive U.S. inflation back toward 5%, which is a level that we haven't seen since the Fed was still hiking in early 2023. And that outlook has traders bracing for potentially higher rates again, which is bad news for risk assets like Bitcoin. And the market was clearly over-leveraged here. At its peak, CoinGlass data showed more than $1 billion in crypto positions were liquidated over the past 24 hours, with more than 95% coming from bullish long. So right now, Bitcoin is looking less like digital gold and a lot more like just another risk trade. Guys?
Well, quickly, MacKenzie, because like everything else, and I've read a bunch of reports that have come out today, I'm sure that Morgan and you have and Contessa Brewer has and everybody's guessing right now. I want to make that extremely clear. We're going on what we know, which is potentially this lack of more escalation. But again, the ball's in Tehran's court. We don't know. So everything we're saying about Bitcoin and oil and everything else is just based on what has happened, not what might happen.
Well, you're looking at crypto markets, which are the first to really digest this news. And so you saw this surge in trading volume on offshore derivatives exchanges like Bybit and Binance, which is pretty classic. You're seeing a lot of these liquidations of the more bullish positions. And also, you had institutional demand really, come down at the end of last week. Monday to Wednesday, institutional flows into those spot Bitcoin ETFs were around $1 billion collectively. Thursday and Friday, it totally flatlined, which dovetailed with the president saying he needed this 2-week window to consider what was next with Iran, which reflects the fact that this is really about basic risk aversion going into the weekend and institutions wanting to play it safe.